No, it's going well.
Well,
it's
my
going well.
driver
There's
doesn't. Go ahead. Sorry.
a few hiccups here along the way. We restructured the webinars, or sorry, the Discord rooms and stuff, etc. So a few growing pains, but we're almost there, I think. So were you able to do this in YouTube? Oh yeah, okay, I see.
The driver's not updated, so
You're on. You're on.
I think
YouTube.
Kamal's is doing it. Kamal's is doing it through this thing.
I don't know about that. Is he?
Why?
Because then you're.
Yeah, I am Bruce.
There you are. Okay.
Yeah.
Okay. Sorry, guys. I'll leave. I interrupted and messed up the whole thing here. Sorry, Scott. Yeah. Continue on. Okay. Bye.
All right. Bye. Let me do these disclaimers that I do for my room, and I'll be back in 2 minutes.
S&P Icebergs by $730 Risk can be substantial, and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. Software, strategies, chat rooms, websites, and any associated websites are digital for educational purposes only. Should not be construed as an express or implied promise or guarantee to profit and loss in any limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to wholesale set trader, LLC, and any associated companies, agents, management, owners, and customers regardless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. The limitations of hypothetical performance results are that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. As these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results and all, which can adversely affect actual trading results.
Trade room and this webinars are not intended to mirror my trades or
S&P Icebergs by ES 701 contract.
Potential trades that I'm taking for myself based on my personal analysis. The goal of this room is to teach traders how to identify specific areas to trade with an edge for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns in my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy this spreadsheet and enter in your own values and use mine to confirm.
S&P stocks LES 512 contract.
It's not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions, depending on which way you personally decide to trade. Alrighty, I guess S&P didn't know I was playing that disclaimer and it interrupted, but hopefully you got the gist of it. A lot going on all of a sudden in here. Huge buy ice just came in, sell stops. I'm actually currently short. I'm going to trail it to this most recent setup. We'll go over all this. You can see these sell stops are tiny compared to this huge buy ice area. I'm going to make this one big zone. This is the epitome of a double whammy here. The pukes, dumb money pukes into the waiting hands of this monster buy ice. This is looking like probably close to 5,000 buy ice in here. So let me adjust the zone. Trail my stops. So this is a pretty large zone, but it is what it is. I'm incorporating all of this. You can see this came in. This was 500, but then that was up to here. You can see this is one player. So this is the beauty of the on chart iceberg. So I draw my zones off the sub chart, but the on chart shows you I have this colored at yellow, and you can see here on the settings. So when a buy ice comes in, I just have it yellow just because I have so many different colors. But you can see this is one player that just bought probably over 5,000. That's 500. That's 1,300. 2,600. This is still coming in here. 46. So this is like probably close to 6,000 buy ice here. So somebody knows something, maybe. Again, because this doesn't mean that this market's going to go up. It's got a much higher chance to go up than down if someone just keeps putting buy ice in here and absorbing all the selling. So this is the edge. This is what 90 I guess 95% of traders don't see that aren't using this program. You know, somebody is selling this aggressively and they are absorbing it all, right? That is incredible information. No matter which way this breaks out of here, that it's going to produce a large move, very likely. First and foremost, let me trail my short stop here. So I'm going to put in this zone. This sheet we use in my room. Sorry for the, we literally turn this thing off every week. The notifications for Discord when people come in the room, and it resets every week. So I don't know what else to do. So you're going to have to bear with it as people come in here. 2625 is the top of this current Whopper zone. Zone 1750. We'll go over why I was short and what I'll do here potentially. It's just so annoying. So currently, I was like I said, I was short. We'll go over that, but based on this current zone, my stop should be 32.25. So I go an ATR plus 15% out of the zone. So we're using this 5-minute ATR. That is a very important factor and should be in anybody's trading because this is judging the current volatility of the market. It's just a 14-period Wilders on a 5-minute ATR and one thinkorswim. That's what I use. So that is telling me once, again, this is proprietary to my trade room. If you join my trade room, you get access to the spreadsheet, which is just incredible. Saves me so much time. Now I'm not doing things by hand anymore. But anyway, it's telling me I need to get out of this short at 32.25 if it pops back up there. So we'll talk about some areas on the downside where I can get out. As far as targets, let me put these in here. I'm not showing my trades anymore, my actual clicking of trades, but I'm going through the exact prices I'm doing things. So, you know, this room or this in my trade room is not meant to mirror me. It's to learn how to do this for yourself, right? So you're never going to make it as a trader if you're mirroring somebody or taking somebody's trade calls. Learn to do it yourself or find another line of work because it's not going to work ever. I don't care. And the thing is, I can give you step by step every single thing I'm doing, show you me clicking, and half the people will still screw it up somehow. So you need to learn how to recognize these areas yourself, why you're doing things. So I was short here, a couple different accounts. So like I was explaining last week, we've got a lot more centralized and focused in my room of what I'm doing. So these are the designated exact playbooks that I'm taking trades, and these are all independent, right? So we have, you know, we'll go over these as they happen, but I currently put on the inflection zone trade, and we'll look at that. And then I put on, this is always in place, so we possibly put on this short on this new setup, depending on how it breaks out of here. But the one I got short on was that one and that one. Izzy trade and the Dumb and Dumber aggressive opposites delta. So we name them funny names just so they're memorable. You can see barf. I laugh every time I say that. So Izzy and Dada are what I'm currently short from Pyre. So this is Izzy. This is an inflection zone. So I share these zones every day with my trade room. I will have a subscription for these for non-trade room members. I haven't had a chance to do it, shockingly. Anyway, this zone was really important. This was kind of like this bias this day is kind of like what's coming in right now, right? Just like very out of the ordinary, 7,000 buy-eyes. There was, you know, tens of thousands contract traded in here. That's why I highlighted it. You can see there's no other highlight on this chart. I'm going to highlight this area as well, but this was the area where it retested and launched from. And then you can see as this market came down a couple times, it held, and then we gapped right through it. So this is the first test back to it. And I was saying yesterday, my mouth was watering for a retest of this zone, and here we are. So we came up into that zone right at the open, and there was a bunch of stuff up here as well. You had some sell ice. I did draw that, but I think I deleted it. And then you had buy stops here. This is the Dada setup. This yellow zone was the buy stops, and then sell ice came in right after that. I traded both those trades, the Izzy and the Dada, off of the stop run, which you can do. And even though something else came in right after that, that's fine. I still entered aggressively off of the ATR outside of that zone, and then I can trail my stop. Could have trailed my stop based on that zone. But as we move down, now something else came in, this Whopper. Now I just trail my stop based on this volume event here, right? So, so those trades are on. I'm short. from, it's not 26.75, so basically right in the middle of the zone. So again, if it pops back out of here, I'll stop out at 32.50, and then this would actually be a bullish setup, and then I have this would be the barf trade. That would be a blind ATR retest failure, and I can go long. So depending on how this moves out of here is how I'm going to trade it, right? I don't just look at this. The minute this comes in, I don't say, oh, I'm going long. You could, but again, this doesn't mean, this is a ton of buy ice, but it doesn't mean they're going to be right. And I can tell you, if they're wrong, they're going to be the ones puking out of here. So the way I judge this is when it is able to push an ATR out of this zone, either way, that will determine for me whether this is a bullish or bearish setup, right? And we have ways to trade them aggressively or wait for the retest of the area, then take the trade. So we'll go over that as we see which way this moves. But this is, like I said, this is very out of the ordinary ice, 5,000-6,000 contracts here, buy contracts. So somebody's going to be puking up here shortly, and we will watch and enjoy it. Quickly, bigger picture stuff. So we saw that zone. Let's look at profile. And you guys, if you have questions, throw them in the chat. I'll get to them if I can. It's not as easy without Bruce in here, but so when you're dealing with market profile stuff, I use this to come up with a thesis for the day, right? To figure out what's going on. You can see, and these are the Ludwig levels. We'll talk about these extensively. So first and foremost, the two things I got short off of. So I look for volume events in important areas, right? So that is the key. The volume event is the edge. The Bookmap volume event, the SI indicator volume event, that is the edge. You can apply that to anything that you're looking at. If you're not using zones, if you're using the 200-day moving average, a Bollinger Band, MACD, whatever the hell you guys are using, the key is using them with the real-time volume setups, because the real-time volume is what is driving the market. Right? So the Izzy trade, the inflection zone trade, it came up right to the bottom of this. I got my volume set up. I went short. Very simple, right? And then my dad trade, that's a Dumb and Dumber. That was that stop run that I showed you at extreme VWAP standard deviation, which this is. This is VWAP. This is one standard deviation, 1.5, 2, right? So we had the stop run at extreme standard deviation with a diverging delta. So you can see here, and this is not, I say it every week, this is not red light, green light. You can get killed. I'll show you one yesterday in natural gas that the thing went up like 300 ticks as the delta kept diverging, right? But in certain areas, this is very useful information. This is part of my playbook, one of my playbooks, the Dad playbook, right? You can see as this market made a higher high, this did not. That is a delta divergence. Now they're actually hammering this thing. And this, what is this representing? Does anybody know what this would be? What is this? They're selling it. So remember, delta diverge or CVD, cumulative volume delta, is telling you who the aggressor is. It's not there's more sellers than buyers. There's never more of one side because there's got to be an equal amount on both sides. It's saying that the sellers are hitting bids more aggressively than buyers are taking offers. Well, what is that? Where could you see that? Right here with the 5,000 buy ice that came in. So these are the sellers that brought that cumulative volume down. Yeah, that's good information, but don't you think it's good information to know that one player absorbed 5,000 of those contracts, right? So the CVD does not tell you the whole story. It gives you information. It is important in certain areas, but this, if I'm just looking at this, I'm like, yeah, man, I want to go short. They're just hammering this thing. Well, not necessarily. That somebody is absorbing this, and who's to say as this market moves even lower, this buy ice just doesn't keep coming in and just holds it, and then it finally rips the other way, right? So knowing that information with this is the important factor of all this, right? So we just sit here and wait for that, but that's why to see what happens out of that zone. But that's why I traded this exact setup. The dad up here was that Dumb and Dumber. Moved out of here, and that trade is an aggressive trade, and you can see here I have them listed. I don't have them listed aggressive or not, but that I took. Again, the Izzy trade, that's an aggressive trade out of the zone, meaning I take it immediately. I don't wait for a retest of the area, and the dad trade. So that's what I'm short off of currently. So again, we're just waiting to see that. So what you're seeing here is breath holding, right? These sellers are I would say they're holding their breath more than whoever this is, because whoever this is obviously has a ton of contracts that they can put on, right? So this is now, well, how come we sold that so hard and nothing's happening here? If this starts to move this way, you're going to see puking. You know, depending on how this, you're never going to know what these guys are doing or how they're going to react ever. So don't stop wasting your time. When this thing first came out, this SI indicator, and so many guys are like, well, you don't know what that is. That could be guys hedging options positions or getting out of their shorts, or it doesn't matter. You're never going to know unless you're sitting next to the guy that's putting the order in, right? All you need to know is this area is extremely important for our traders loaded up, and you want to take advantage of when it moves out of here. That's what we're waiting for, right? And when you can layer this information into important areas on your chart or whatever you look at, then you have an extreme edge. Probably the best edge I've ever seen in 25 years of being in the markets. I don't know if I've mentioned that before or 5,000 times. Are those zones available for the public? I think you're talking about my inflection zones. No, they're part of my trade room. I will have a subscription for these because I post, you can see here, I post every day in my trade room, like 17 different markets, right? So every one of these I post every day, and then all you got to do is blow it up and you can copy them yourself. But I'm going to have, I will have a subscription service too, but these are all the markets that I track. Right, you got all these more obscure markets like copper. I don't do 60 anymore because they won't show icebergs. Don't even get me started on that. The grains, soy oil, soy meal, lean hogs or cattle, lean hogs. So you get the zones for all these is what I'm saying. I will have a subscription for that. It'll be cheap. It'll be like $30 a month or something. You can draw the zones yourself too. They're based on the 4 areas of charting. But I mean, if you don't want to spend your time like I do, spending an hour every morning drawing these things, and you can just get them from me, and then you wait for volume events in these areas. And what I tell my room all the time, they are not trading. These are not meant to be traded. Every one of these, right? Unless you are an extremely experienced trader and you have great mental bandwidth and you want to watch all of these over multiple markets, that's fine. But you should be taking. What I tell them is look for 1 or 2 of these. So this is say I'm just looking for volume events and important zones. You take that trade alone, that will be extremely profitable over the long run, over a number of trades. And that's what I'm doing here. I'm using these Apex accounts to track each one of these setups, so we know, because up until now, I had all this stuff in my head. So I would be taking a trade, and you guys have watched it on webinars, right? I'd take a trade one way and then another way, and I'd like, okay, I'm seeing this, I'm seeing that. Well, now it's way more focused, where I'm saying, like in my room, I literally said, before we got on here, you can see this is what I do as much as I can throughout the day when I'm not on my webinars. I definitely do it when I'm on my webinars. Right? I put in here, possible Izzy and Dada ES, right? So that's the short that I'm in. So that's, it makes trading so much more clearer for me and my traders when you're just looking for, setups, volume events with the parameters of my trades. I don't have the parameters here because that's proprietary for my trade room, but I'll talk you through these, right? So that's what I'm doing. So then I'm tracking all these, and you can see this is we don't only be doing this basically since the beginning of February. As far as the tracking, but you can see here, every one of these trades, as of right now, and again, this isn't trading, it's a probability game. There's going to be losers. You're always going to have losers, but you can see every one of these strategies is profitable. And I just started this, so these 2 are live, right? But every one of these, and the whole idea is this is what it'll look like as we put more and more trades on, right? If you have an edge, that's what your P&L will look like. That is exactly what we always talk about. A casino, that's what their P&L looks like. If you have an edge, then that's what casinos have, and that's what you have if you're using this stuff. That's what your P&L will look like, right? And we talk about this every day in my trade room. One of the prerequisites, if you come in my room, is you have to tattoo this to your forehead. I tell everybody, if you don't want to do that, if you don't want to walk around for the rest of your life like Mike Tyson with a face tattoo, you can print this out and read it every single morning, because this is what trading is. It's probabilities. It's putting the odds of success in your favor with an edge. Then you have to, this should be tattooed to your forehead for sure. Anything can happen. can tell you how many trades I've had and look golden. Then someone says something, kind of like yesterday. I was short overnight. Bullard came out at 5 in the morning, my time, 6 in the morning, and pumped up the market. And the market ripped, stopped me out to the tick, and then dropped 40 points. So it's like anything can happen. You gotta. Doesn't mean you have to be happy about it, but you just have to realize when you put on trades that's anything can happen. You don't need to know what's going to happen next to make money. There's a random distribution between wins and losses for any given set of variables that define an edge. And that goes for any edge, anybody trading, anywhere. Nobody has 100% winners. If anyone tells you all they do is win, or they win at 95% or whatever, just run the other way because it's bullshit, pardon my language, right? So this is directly out of Trading in the Zone book. Get it, listen to the audio book. And then so this is it. You can be the casino if you have an edge. You're checking puts the odds of success. Odds, not guarantee. Odds. You can think about trading in the appropriate manner. The 5 fundamental truths. That's this, right? And then we have these exercises that we do. And this is one of the trades was born out of just showing you come up with anything that has an edge and then come up with rules. And that's the reversion trade we're doing in the room. So I just want to show you that. But we will, we're going to check in every month for these strategies to see what the winning percentages are for these. We'll get into Apex a little later, but highly recommend if you're learning, if you're struggling, this is the one. I know there's a bunch of them out there. This is the one that I put my name on, and I've done them before. I did these early last year when this first came out. I got heard from a reputable, very experienced trader that they were legit, that they weren't just in it to take people's traders' funds, to do the tryouts and stuff like that. They actually wanted to fund traders, so on and so forth. So I did them myself, qualified, had a couple blowouts because the thing is you have a trailing $5,000 stop for like the $150,000 account. We'll go over that later. I don't want to confuse you, but I did it, qualified. They gave me the account immediately. And I qualified, and it wasn't a bunch of nonsense like some of them do. Like, okay, well, now that you completed that combine, you need to do the super secret live trading combine. It's like you qualify, you do what they say, you follow the rules, you qualify, you get funded a live account. So I got funded and I got paid from the one reversion trade that I'm doing live. So they're legit. So the whole goal is here to get all these live and then just trade off these. I wasn't going to put in, $10,000 in each one of these out of my own account. One, I make mistakes all day long because I'm on webinars and I just am distracted so many times. This is a great way where, once you get funded, it's real money. But if you blow out these accounts, you're not risking your mortgage or your car or your wife, right? So this is a no-brainer in my opinion. We'll get into that a little later if it slows down here, and it looks like it's going to be pretty slow because there's a lot of breath holding right here. So. Quickly, I'm long crude, so this was the BARF setup. BARF is blind ATR retest failure. That's this one. I put that one on earlier this morning. And this is exactly what goes on all day, every day in these markets. We have a trade for this exact thing. This one went a little further than usual. There was high relative volume. I actually told my trader to beware of taking this reversion trade, but this did work. So you have this was like 3 ATRs, retest, failure. I went long. That's all that. That's the only criteria for this trade. This trade is literally in a vacuum. I don't care where we are on the chart, market profile, Ludwig levels. This trade is just put on. That's why it's called BARF, blind ATR retest failure. I go long. So I'm long right around here. My stop is 115% of an ATR below there. And now this is working. So now let me see some areas that I can potentially get out. So I have specific areas that I look for to piece out of my trade, right? So number 5, I pay myself as the market makes money available to me. These are the areas that I look for, and we'll go over these, that I will possibly get out of some if the market starts to struggle there, right? So we'll go over that as we get here and see where we're at. Get this off the screen. Natural gas numbers coming out in a minute. So you can see here, I actually should be taking, if this struggles here, I'm going to get out of a couple. I have 10 micros on. I can't trade like 10 normal size contracts because those Apex accounts are $5,000, right? So, I mean, that's all you can lose, a trailing stop. You're trading normal size, you're going to blow out the account. So I have to trade micros. And there's nothing wrong with trading micros because instead of trading one, so 10 micros are equal to one large contract. Well, if I have one on, it's one or done. Like I'm out. If I'm out, then I'm out. If I have 10 on, I can get out of 3 right here and leave 6 on. You see what I'm saying? So this has some confluence here. You have extreme standard deviation. That was one of the rules that I get out at. You also have this prior market profile low, composite low, right there. Market profile composite highs, lows, or point of controls, VWAP standard deviations. So both of these are occurring right here. So this is a good place to get out of a couple of these contracts if it starts to pull back out of here, right? I always give it a chance, and this is where you can use your bubbles, right? You don't want to be trading off these bubbles per se, but it's telling you, because all it's showing you is buying and selling. But if you get to an important area and you start to see red, you know, I'm going to get out of some of these. One second, let me find that. So I'm going to get out of I'll get out of 4 there because there's a couple different things. All right, so I still have 6 on, and then I'll see if this works. If not, if it comes back. So now, basically, I would watch if this accepts. It's still out right on the edge here. Probably jumped the gun there, but I can't watch it as closely because I'm on these webinars. But if this accepts in here, then I would watch point control. Probably out because I always look for confluence. So you see the point of control of this is right near baby lug. So I probably get out of a couple there. And then my ultimate target is the red Ludwig levels. These things are ridiculously, I talk about it every week. It's the second most powerful thing, a very close second to Bookmap and Bookmap SI indicator. Right?
Stops RTC, 105 contracts.
So what these are, these, you know, obviously resistance support, you can use them. They're extremely powerful for targets, but how the market's reacting to them to come up with the thesis is important too, right? So for instance, you drew new lugs here. So the conditions were there to draw new lugs. Well, how this reacts once we draw new lugs, you know, if this is the directional yellow, and that's where a lot of times you get. See that same entity is still buying ES. We'll be there in a second. But how this market reacts once you build new lugs, if this can't get back below and stay below this red, then you expect this red, right? So and red, directional yellow or red. So again, there's a video out there that I did with Pamela. It's in this room, or it was in my other old room. If you want to email me, I think it's on my YouTube channel too. Just Google ScottPulciniTrader.com YouTube, and it's on there. And you can watch. I had a webinar with her, just her and I, where I was asking very simplistic questions because I like to keep my trading simple. But she talks about this very instance, and you know, when you build new lugs, what you should expect. If it doesn't happen, then you expect the other major lug. They're incredible. I just can't. I've been using them for 2 years now. She's in my trade room as well, in and out. They're ridiculous. That's all I can tell you. So you can see this area is failing right now, but I got out of a few. Let's see what's going on here. Let's see if this is the same house. And the on chart will tell you. Let's see the yellow line on this one, but this is more buy ice, right? So what I'm going to do here, because I don't see that yellow line, I don't think this might not be the same house. I'm going to draw this as a separate zone because this zone is getting to be, you know, I don't need a 20-point zone here to trade off of. This is threshold. That's plenty. You actually had 2 stop runs. So this is another little mini double whammy, mini compared to what we're seeing right now. So meaning the dumb money puke into the waiting hands of the smart money. They're only smart because they're bigger, right? They make themselves smart. So let's draw this quickly, and I need to trail my stop based on this new setup. Let's change the color. I'll try to answer some questions so I can catch my breath. That's the other bad thing now with Bruce not in here. I can't catch my breath because even when I'm answering questions, I'm still chirping. Let's see. And I'm colorblind, as you can see, so those probably don't match. All right, so the new zone is 1775 down to 1375. So I come in here. Just change my zone. And this is how I trail my stops. I don't trail my stops because I'm afraid to give back my profit. I trail my stops based on something that's happening in the market. And that's what you should do too. The market doesn't care that you're giving back your profit. The market doesn't care that you need to pay your rent. It cares about volatility and volume events. Speaking of volatility, we are up to 5.53 on the ATR. So now this tells me where my stop, I can trail my stop to. So now I can move my stop to 24. So basically this trade's break even. I'll make a couple points. It's already probably there. There you go. I should have to be out of this. Hold on a second. 24, I'm out of that one, and I'm out of that one, and this is official. Now this is official bullish setup. So why is this a bullish setup? Anybody tell me? Let's see if the text is working. Why is this a bullish setup? And my trade room guys, they don't count. You can't answer. So go to the text channel, Future Scalpel, Sydney, if you want to participate, and you'll get an A. I'll give you an A for the day. Can I show how I plot the black lines on crude? Yeah, I'll show that. So you mean how I draw them? Parameters. So anybody tell me why this current setup is a bullish setup after what we just talked about? That's this. That's this dark blue line. Actually a double whammy. It's incorporating these sell stops in that. Anybody tell me why it's bullish? What I'm looking for now. Let's see where we're at, by the way. We're just dancing around VWAP, dancing around yellow lugs, so that's nothing here. This is telling a bit of a story, possibly, where it tried to get in here and now it's trying to get back out. That is telling you something. If this starts to launch, then I would expect it to get back in here where it broke down from yesterday. But if this comes back, then I expect the other side. So markets accept into positive value areas, you expect it to make it to the other side. You see this bounced right off that boat. This is a 2-day composite. I just merged the two. This is what I do here. These are just the last 2 days. More than 50% of this day overlap this day, so I merge them. And then I make a composite. And these things are extremely powerful as well. Right? So, and then you come up with stories or thesis based on what the market's doing to these. It came down. I'll stop point of control. Now here we are. It looks like it's going to try to bounce out of here. And then we know there's about 5 million buy ice here too. So probably a lot more likely we do that. Don't know yet, but this is based on this newest setup. This is a what type of setup? Nobody's going to answer. Nobody wants the gold star for the day. This is a bullish setup now because it was able to push ATR out of here. Now I'm looking for a retest failure. And at minimum, the strategy is very active, obviously, because it's just blind ATR retest failure. Barf. So I'm taking this trade on this Apex account. If that happens, what are those prices? Right here. So if it comes back, retest, moves out, I'm long at 40.24. I stop at 07.50 based on the current volatility, which you got to keep an eye on until you're filled. It's right on still. I could put on 6 micros. You don't change this. You don't say, well, I don't want to risk 16.5 points. I like to risk 5 when I trade the ES. Please, you guys hear me every single webinar. You do not change this. The market doesn't care. You only want to risk 5 points. The market cares about the current volatility. You adjust your size based on what you have to risk, not what you want to risk as far as points. You see that? This is one of the biggest errors that traders make. This and trailing their stop to break even. That about 5 million algos are set up to come back to certain areas because they know all traders trail their stops, right? The 2 biggest errors in trading from retail traders, right? Static stops when they put their orders in and trailing their stops. Or yeah, static stops and static profits too. But that's a little more open to that versus the stops where you just say every time I put on the ES trade I'm risking 3 points or whatever. That's just silly. That makes no sense. None. Again, the market does not care what you want to lose. All right, so I'm waiting for this to retest. Right, time event, ATR, retest, failure. I'll go long and 24. My stop will go 15%, 115% of an ATR below the zone. We just saw those prices on there. Okay. So I'll keep an eye on ATR and adjust this until I get filled. But once I get filled, I don't change my stop price. I just leave it, even if this changes, right? Usually just contracts, but I've learned the hard way not to keep moving my stop up because it'll come down, stop me out to the tick edge every single day of my life, and then I'm over it. All right, so now we're just waiting to see what happens here. Again, I'm waiting. The only trade that is in play here is the barf trade for me for the long. I was short. I stopped out, made a couple points. It's like this is what following rules are, right? It's like, did I want this thing to die? I always wanted to die, but I really wanted to die because I was short from up here. Well, this came in, and my rules say, this is a bullish setup now. I'm out of the trade. I don't sit there and just ignore this happen because I want it to go down. Right? I'm just adjusting to what the market is giving me. And so what I'm trying to say too is my rules for the bar for this, and this. If this goes like this and this and this, then that's not a bullish. I'm not going long. It's going to suck because I was short, but it is what it is. There's another setup right around the corner. So here's the shocking 1 ATR retest. I don't know if we've ever seen this before, or where it happens about 85 times a day over all these markets. This is what we have the trade in my trade room. I don't put these on here. I don't even do the 1 ATR on my trade room on the webinars because it's just too active and I can't keep up. But here you go. I guarantee you about 10 traders in my trade room just caught that trade back into this zone. But that's the pattern. Now this moves back out of here. I will be long. Let me set that up. Our trade is Apex 40. Let's make sure this is still, it's 5.38, so it's come down a little bit. 24 trade, so 24. I could put on 6, 24, and Apex 40. Set that up. So very quiet. I'm telling you, this is a bunch of breath holding. Somebody is going to be puking out big time once this moves out of this area. So we'll see which way it goes. Let's see if there's any questions. Zones good for public. What's your thoughts on gold? Gold is in trouble. As usual, retest the important inflection zone. So this zone was directional conviction higher. It wasn't crazy directional conviction, but it was. This was also a gap up. Was it a gap up? Gap down from here. Now it's just directional conviction, and you can see this held some tails. So this isn't a crazy important zone, but it's important, and especially it's part of this balance, right? So now this market broke down, came back, retested it, failed again. I think there's actually a setup up here that I did not. There's just, I can't get track, and I was trying to set up my or the Discord for the webinar. Let's see here. Yeah, I knew there was something up here. So this was an ESI trade. I missed it. It's in the inflection zone. So this was back to back. This is 150's threshold. So you had back to back, and you can see this is one player. There's the yellow line, right? It's just good information to know that you will never know anywhere unless you're sitting next to the guy putting on the trade. That's why Bookmap is so important to my trading. Guys, this is why I'm in trading. I would have been out of trading right now. I'd be sitting in a doctor's office with my sales briefcase ready to kiss some doctors' asses. That's what I'd be doing right now if it wasn't for Bookmap. So you may want to listen and learn, because unless you like working for the man, this is the end all be all as far as I'm concerned. So anyway, this was the Izzy. I missed this one. Just put the zone and see where I entered. I might get lucky and it might come back there. I can get short. There was a new setup, but let's see quickly. Very happy. Maybe look at gold, but this market is a clown show most days, but there is nothing going on right now. So the top of that zone is, it should not be in between prices. I just misdrew. I didn't draw that zone correctly, right? So you can see here, you got to spread out your charts sometimes and make sure, because it's very important. We'll be ticked out. I get ticked out about 5 times a day, and if these zones aren't drawn correctly, you may cost yourself. So it's 1837.3. We go over gold. The zone was again. I missed this trade already, but we'll just see what price I should have been in at. Again, that's between the prices, so I did something wrong there too. Hold on. You can see it came down. You want the spikes, so I incorporated both of those. So it's 1834.6. ATR, just standard 14 Wilders on Thinkorswim 2.41. You can get this on any trading platform, I'm pretty sure. So if you have NinjaTrade or whatever you're using, you can set this up. 14 Gary Wilders. So I was going to go, and that was an Izzy trade, right? That was inflection zone trade, Izzy. So it moved up to that zone, and I got a volume event. That is what I look for, right, for that specific trade setup. So that was right in here, moved up. You had your sell ice. That trade is an aggressive trade. So it tells me right here where I should have been short and how many. So I should have been short at 83, 831.8. I could have put on 6. I'll show you, this is more advanced, but I'll show you how you can. Right, 31, I can put this on right now, actually. All right, let me put this on, and I'm going to show you a little trick. Not a trick, but it's a little more advanced, because when a new setup comes in, you can just trail your stop, but you can still put out the original trade. Of course, I can't find the damn thing. Hold on. Let's see, sticks. Why is this not? Oh no. This really just spiked down. This. What did this just do? So I should have been in up here. So if it comes back up here, I'll get short. It's 831.8, right? Yeah. I'm not going to chase it because that just ruins my whole risk reward and my percentages and everything else. So I should have been short this setup. This was the setup in the inflection zone. As soon as it moved an ATR out of there, which was 831.8, that's where I should have been short. It gave me a chance to get in and I just missed it. So this is gold. It'll probably come back 18 times. So I'll probably get filled. I mean, you can see it looks like a Christmas tree. That's because this is just riddled with algos, right? So I'm not going to chase it. If I miss it, then I'll just complain the rest of the webinar. But what just happened here, there are more trades in play now. This is the rare stop run in gold. Just kidding. There's about 85 stop runs a day in this market. They're the worst traders on the planet. I'm convinced. I don't know how they're still trading because all this market is stop runs. It's crazy. But this is threshold. It's over 150. You got 205, so we'll draw that. So I'll show you what I'll do here if I get filled on the Izzy trade. And I can put on, you can always put on the BARF trade. The BARF trade is always in play.
Q stocks LNQ 154 contracts.
All right, get us up in there. So what I can do, I'm not filled yet, but if I was filled, I can trail my stop based on this new setup. I can still take the BARF ATR retest failure, so we'll look at that here in a second. Rather go look at NQ because more people are trading it as well. So that sucks really, really bad that I got. And let me guess, that was to the tick in the ass that I got filled. I never put on that. I want a little higher. No, I didn't. It was at 26 quarter. How did I get filled on this? I guarantee it's the tick because it's always at the tick. That's why I'm crazy. What's this? Oh, no, that's why, because I trailed my stop. I trailed my stop based on this new setup, right? So, but it got a point through there. Remember, it was at 24. So I did stop out. This sucks. It is what it is. But this is not a long, and I didn't get filled on the retest failure because I never fell back out of there. Right? So here we go. Still buying it. This isn't exactly threshold. But this particular setup is not, I can't trade it to the short side because it's already invalidated itself by getting an ATR to the upside out of there, right? So those are my rules. If the market is able to push an ATR out of the volume event one way, I don't take the trade the other way until I get a new event. Could draw this. Let's see. I mean, it's close to threshold, but it's not quite. Especially with the size that's coming in today, you do not want to be like, oh, it's close enough. It's 632. We just saw 5,000 buy ice. You do not want to be drawing zones to less than 700. You probably don't even want to be drawing 700 today. You do have some stop runs here too. They're not that big. No, this is almost threshold too. So, I mean, you could draw this zone. I'm going to just move over to NASDAQ. You almost had threshold stops, which are 500, but you did have back-to-back. I mean, I'll draw that zone. I'll trade out that zone. I'll come back there. It's not the best idea because of so much volume is coming in today. You got to be, it's just like volatility, right? Like, my threshold is 700 for ice. Well, if I keep seeing 2,000 buy ice, I don't want to be drawing zones for 700, right? What was in here? That was this. So this was threshold 200 stops. Surprising this liquidity got filled. That's all that goes on all day long. Started right here. You can see the red line on the chart. All I'm doing here is I'm taking this spike and I'm following the prices all the way that incorporated in that spike. So that may or may not be wrong. And that's how I draw my zones. This went a little lower, I think. See how this still went a little lower while it was still on the spike? So I got to move this down a little bit. Color this yellow. That's what I color mine. Yeah. White. Your zone, I know that is tedious and annoying, but it's just how it is right now as far as drawing these zones. A couple different developers looking into how to draw these zones. Bookmap says it's very hard to do, so I believe them obviously, but until then I got to do it by hand. So it is what it is. For the most powerful thing I've ever seen, I'll go ahead and accept that little drawback. All right, so this zone covered was 151, 12, 151.75 was the high. The zone was, there hasn't been many setups in NASDAQ today, which is kind of strange, but especially with what's going through on the yes, 44 quarter. PR is
Stock sell HT 235 contracts.
I'm not going to trade copper right now unless nothing's going on, then I'll go back and look at it. ATR is, you can see right there in the middle left, 26.48. So that means this market's rotating about 26 and a half points for 5 minutes. Very important information. You plug that in, and then now here are my prices if I want to trade. If I want to go long, I go long at that price. If I want to go short, I go short at that price. For me, for my trading, what was the price to make this zone a bearish setup? That would be one ATR out of the zone. 12,117.75. Did it get there? Sure did. So that is an ATR. So this is now an official bullish setup. So minimum, the BARF is in play. Blind ATR retest failure. I don't care where we are on the charts. I will take that trade on that account, that specific account. Because this is why you want to do this, right? It's like if you have multiple accounts set up for each setup, and you're not conflicted. You're like, well, it feels like this market's going to go back up. I don't really want to go short here. I don't take anything into consideration. If I get my parameters for this trade, I'm in. And this is a separate account than this, and this, than this, right? Sometimes you're going to have them all lined up. Sometimes you're going to have different setups in different markets. Or, very rarely, you're not going to be in these opposing, because when it gets an ATR out of here, so say I was short slug and then I get a bullish lick trade, well, the minute it gets an ATR above the zone, I would be out of this and then this, you know what I'm saying? So you're never conflict, and that's one of Apex's rules anyway. You can't trade opposing accounts, and I can understand that. It kind of sucks because you can't trade one short-term, one long-term strategy. So say you're scalping one and then you want to put on a long NES for days or whatever. You can't do that per their rules, and it makes sense. I understand why they're doing that, because say you got two accounts, you buy two Apex accounts, you put on, say a number's coming out, you go long one at this and short the other at the same price. Well, one's going to lose the $5,000, but the other one's going to be up $5,000, and you're halfway to your profit goal to be funded. That's why they're doing that. But they have to come up with a better way, I think, because you can't trade like shorter term strategies, so on and so forth. But I digress. Anyway, so that's the minimum I could trade here. Now let's see where we're at. Do we have any ISIs, or is this an inflection zone that I could be trading? No, but you can see where this failed. And hopefully I didn't miss a setup. This was why I have these zones drawn. This was this. Directional conviction, rip through it, first test back, held, buying tail, rip right through it, first test back, failed again. These zones are unbelievable. Again, you can draw them yourself. These are very, I already know they're important. And then when you get your real-time volume set up, there's no better edge. So anyway, we're no Izzy here. This is a retest of this current balance. This is a very important area. This is a multi-day balance. Tried to break out. Here we are. This might turn into a failed breakout. That's one of my favorite trades as far as, right, if it gets to the high volume node of this, bye-bye. At least back into this, probably deeper into this Izzy. And this was where we had like 60,000 NASDAQ contracts, 4,000 buys. That's what that's called. They're kind of like the ES, those all in the same day. But if this fails, I would definitely watch into this zone, minimum deeper into that zone. Let's see what's on here. The bias isn't feeling very good right now. I wouldn't think if they were initiating positions. They're probably getting calls from the risk manager right now. What the hell are you doing? Why do you have 6,000 on? You need to get out of these trades immediately, or we're going to get them out for you. How do I know that? Because those are the calls I used to get. They're not phone calls. I used to pull the phone out of the wall. I wouldn't have to answer, and then they come knock at my door. Don't even get me started on those stories. So I said I'd draw this zone. Let's just draw it. It's slowing down in here because I don't want to miss. I want to be able to get short, and this setup is already disqualified for a short. Again, you're going to get a big move, and it's probably going to be lower if this thing can't hold. This buy ice up here, again, the risk manager is calling them right now and be like, what the hell are you doing? Why do you have 6,000 on and it's 20 points in your face? Good luck to them. Hope it works out for them.
NQ Iceberg sell NQ 151 contracts.
So I'm the retail trader now too, so I'm always cheering for the big money to get their heads kicked in. So there you go. That's that. This is a competition, whether you want to admit it or not. Like this, the algos and the big money, they're trying to take your money. How do you think they survive? I mean, this is what they're trying to do. So, you're best off. You better be thinking of it as a competition, you versus them. But you get to see what they're doing. That's the key, right? You get to see that they bought 5,000 buy ice here, more here. That's the information, right? All right. So that's the most current zone. Let's draw this up. Something as NASDAQ 4,012 down to 4,150. 1/4. Up, so I don't miss this trade. I'll try to answer some questions. I'm not looking where it's not being ironed. Any questions for me? 1/4. There is 5.96. Which I think it's not out of that short right about now. All right, so this is a pretty wide zone especially for the size. This was even threshold, but I put it in because it was that, and it did keep spiking. It did technically this is. So you had 345, then it went up to another 635, so that's 1,000. Then you had another 200 there. Then you had multiple stop runs. So this area is legit, but it's pretty wide, right? So I'm going to see how this trades away from this zone to determine which way I want to do. There's no Izzy here, meaning there's no important inflection zone. I could have joined, actually, let's see here. There was a gap up here today. The gaps are directional conviction. So this closed right here, 4,000 yesterday, and it gapped up to 30. Yeah, this is an inflection zone, so we can draw this. So this is an Izzy. So I could take this trade long if it breaks back above that zone. Right? So I'm going to incorporate that. You'll be amazed when you draw these zones. Many times there'll be other stuff there. There's not much here besides a buying tail, but I'm just going to draw it from here. Pretty small zone too. I'll just draw it. This is an inflection zone. This is where this market gapped up from last night. There's not 85 things here confluent, but this is an important area. I'll take that trade if it moves out of this zone aggressively. So that price would be this zone so wide. This is going to take a while. But I would go long at 1875, put on 4. Other than that, the only other trade that is play off of this iceberg is the BARF. Line ATR retest failure. So no matter which way this goes, the BARF is the most active trade, obviously, because every time you see a volume setup, you're waiting for ATR retest failure or ATR retest failure. I could trade barf. We just got to wait for it to move out of the. Let's go to the NASDAQ. You can see here, this is large, almost 3 times threshold. Threshold for NASDAQ again is 150. So the best way to draw these, you want to get these bubbles off of your screen, pull the slider over, get the last price line. You right click, configure visible components, last price. That'll give you the white line. That's where it actually traded, right? So that's what triggered this sell ice. And you want to incorporate all the prices that all these prices that happen in this spike. What's this guy? What numbers is this guy reading? Oh, that's why it's Monday was a holiday, so crude just came out. Forgot about that. I was like, what number is this guy reading at 10 o'clock Central? Because Monday was a holiday, so they do the crude numbers on Thursday. I probably wouldn't add that long on into that number at crude. This is new information, right? All bets are off when new information hits the market. It's not really doing anything. I'm still going to get out of this. I'll just wait for a new setup. Hold on. I already got out of 4 earlier at that area we talked about. This could rip up, but it could rip down. And now it's just a guess, in my opinion, right? So I'm going to wait for a new setup. I was trading off of this guy. We already went over this. You got your ATR retest failure. I got out of some at that, whatever it was, the market profile composite, I think. But yeah, this could do that. But there's new information in the market, so I'm going to wait for a new setup and I'll trade off of that. I shouldn't even have had that trade on into the number. I just got lucky that I didn't get smoked. It's not a winning formula. All right. So that's that zone. Let's put this in and I'll try to answer questions. If you guys have questions, put them in the chat. 12, 117.50. No, 250 is your zone. ATR is 25.81. We're doing the position trading. That's not right. That's someone I was mentoring. I was showing him something. These accounts are 5,000 for these Apex and extremely aggressive. If you're trading a real money account, do not be risking 10% on your trades. 1.5 to 2% max. I'm more aggressive with these Apex because it's, if I blow them out, I got to re-hand $80. I'm not losing $8,000 if I'm wrong. See what I'm saying? And we'll go over the Apex here in a little bit too, because there's always questions on that. So these are the prices. If I want to go short, that 72.75, long 47.25. These are the prices to validate the zone either way. So this needs to get up to 43.25 to make this current volume setup bullish. Okay. And if it gets below first, 76.75 would make it bearish. So I don't know what this is yet. The only trade here, let's see, was this where this gapped up from to? This is when we can make this.
Iceberg class EW 151 contract.
So this is a E2. This is an inflection zone. This market did gap up from here as well. I just didn't draw these. I don't know why I didn't see that today. I just didn't look because I put these zones out before the market opened, so I wasn't really paying attention where we were. But this is definitely a zone. Izzy is in play here. Izzy is a fade trade, right? So you're playing moves into the zone to fade them. It wouldn't be a short because it would be through there anyway. So meaning I will go long aggressively, meaning I'm not waiting for retest failure. The minute this touches 43.25, I'm long the Izzy trade. Or the Izzy account. Izzy account is number 39. I can put on what I say that was. So it's 3.36 micros. I'll round up to 4. It's on here. 43.75. Right? That's the one ATR. I get in at 115% of an ATR because I force these algos, these markets to push outside of an ATR because otherwise you have these algos that snap it back, as we've seen already multiple times a day, where that's the reversion trade. So if I'm going to take a position, I force it to get outside of the ATR. That means it's fighting the algos and something bigger is going on, and I'm willing to take the long at that point. So that's why I do that. Guys, this is not, guys and girls, this is not hypothetical stuff. This is from watching thousands and thousands of these setups. This is what I've determined the best way to trade them. If you have my original course, none of this is in there as of right now. The new course, it will be out here very shortly. I keep saying it, but I want to. There's so much more in the new course as far as drawing zones and incorporating the sweeps and all the other stuff that Bookmap has now. So it's going to be way more enhanced. But the original course is still very important because it talks about all of these setups, right? My 5 main setups. We've added one more since then. The thresholds for each market. What is enough to trade that specific market to make it meaningful? And then the theories. It's not theories. What's happening behind these volume setups? And again, I say it every week. The reason I'm on here is because I was at one point a documented $1 million trader, right? So I have experience. I'm not a $1 million trader again yet. I will be, especially using this stuff. Back then I had a trading firm behind me, and it's a whole different story when you got huge money behind you, as we see these big money players running the show. But I used to average, and I got an email last week after the webinar, and they came on and were like, "What do you mean you average 50,000 or you were 10% of the mini volume?" I don't know if he thought I meant now or that, because it says on my website. Back then, when I was scalping, I was average 10% of the volume every single day. That's how active of a scalper I was, in and out, in and out, in and out, all day. 50,000 contracts a day. Back then, the mini S&P would only trade about $500,000 contracts on average in a day. I was 10% of those every single day. I used to average over 1 million contracts a month, clicking with my mouse, right? So there is no one on this planet that has more volume experience than me, right? As far as order flow, nobody on the planet. I will put my name against that, right? So I'm not saying that to brag, guys. I'm saying it. You may want to listen to me with what I've seen over my 25-year career, and that's what these volume events are based off of. How I used to react when I was wrong, how other players would react when they were wrong, and back then you can see exactly who you were trading with, so on and so forth. So these are not hypothetical things. I know how I used to react, and then on top of that, I've seen thousands and thousands of these now. And I know how these areas should react, and what do they normally do, and that's what we take advantage of. That's the edge. All right, I gotta take a break here, breath. So that never got an ATR out of there. Close 40. What was that? Let me see, 43 quarter. It didn't get an ATR out of there, so I still don't know what this trade is, what the setup is, if it's bullish or bearish. I do have my resting order to trade this on the bull side, but this needs to get out of here at an ATR aggressively, 115% of an ATR. And then I could put the barf on too, but again, I need to see ATR retest failure for that one. So we're just waiting for that. What's going on ES? I think I'm missing a trade in gold here too.
Iceberg sell CL 151
Right,
contract.
so that's the setup I was looking for in crude to get back in the trade. This ES is still in this zone. We're getting a barf trade here in gold, I believe, off this newest setup.
Iceberg sell CL 152 contract.
Got some large stuff coming on in crude. This is what I was expecting to happen after the number. Let's just check gold here. Put out a barf trade in here. Just make sure this ATR is still correct. It is 22.23. That market or that setup to be bearish, it needed to touch 24. Is that right? That's not the right zone. I never drew that zone. That's why. Hold on. I never inputted that zone. I mean, just hold on, gold. Don't be getting crazy on me. 1830.7. I'm going in gold here, but 1829.9.
NQ stock sell NQ 155 contract.
So we got a new setup in there.
S&P Iceberg buy ES 700 to contract.
Hey, what do you know? They're buying ES.
S&P stock sell ES 949
I'll come back to that. I'm not going to waste my time on gold right now. But this looks like ATR retest failure. Just quickly, that price, make that a bearish setup, was 77. So hey, look at that, is the exact price. This is why we have this other trade in my chart, guys. I mean, this is literally ATR retest. If I get a chance, I'll put that short on. Now, let's see what's going on in here. How's that buy ice doing up there that bought 5,000 contracts? Are they feeling pretty good right now? This looks like to me, it's like they have so much size, they just keep putting it in. They're like, okay, we'll just keep buying it until it finally stops, and then it's going to rip up. I'm just going to delete this other zone because there's a new setup, and that wasn't quite threshold anyway. I mean, it was, but it's such a big zone, and we have something new. So I'm drawing to this. This is obviously the same house here too, but I'm just going to draw this, that zone. So you just take your little crosshair, you take it across. There was stop. So this is another double whammy. It's dumb money puke into the waiting hands of the smart money, but they're not so smart today, are they? Not doing so well yet. So we got a brand new zone, much more narrow. Let's change this color because I like dark blue for my double whammies. This is one of the 5 setups in my course, original course. There you go. Now we put our values in. 4,000 to 97 quarter. And ATR is 6.13 now. Here are our prices. So to make this a bearish setup, it needs to touch 91 and make it a bullish 06 quarter. And then I can trade these prices if I want to go long. Here's price, stop. That spreadsheet is a godsend if I didn't mention that. So let's check what everything's going on. Actually, this is, I believe, let's see, maybe a dad setup. Oh, we definitely have the slug in over these, but the slug's happening right now in Q. I don't want to miss that trade. Hold on. This is not dad. So we are at extreme standard deviation with a stop run, but this is not a diverging delta. So that trade is not on the table. But just to note this, what do we say? When markets accept in market profile composite, what do you expect? The other side, straight down to the other side. There you go. This extreme standard deviation. I could see this thing bouncing here. Don't want to miss this trade. This is off the lug, and I just got done talking about how important those lugs are, how powerful. So we have a specific trade called the slug. That's one of those playbooks. Let's see, this was threshold itself, and this continued. So I'm going to draw this one zone. I'm just going to get rid of this so I don't confuse everybody because this is the new setup. Let's draw this, and I'm going to trade long off of this aggressively if it warrants. That's right. We'll see here in a second. This might not be right, so let's just see if this zone's correct. And this continued, but it was only, I'll just draw from here. So it's right here too. So you can see it started a little higher. See the red line on chart, another great of the on chart. Helps you draw your zones and the sweeps indicator too. Actually, these sweeps caused the stop run. I don't want to confuse people, but you can see there was buying involved, and then the sweeps came in, which triggered the stop run. So I don't want to get into that right now, but just a more accurate way to draw the zones because the stop runs can be sitting at 375. The stop runs don't have first right at the order, so whoever swept has first right, then the stop runs fire off. So the stop run's going to be sitting here to trigger. So I want to incorporate the sweep that caused the trigger. That's why you want Global Plus, because it shows you the sweeps. Very important. 12,103.75 down to 96.25. 6. Trade this thing aggressively to the upside, possibly. 6.75. The dummy proof of this too. I use all the time because it could be a dummy. Well, R is 26.84. It's very quiet. Let's get some tick strike going. I had this on earlier and it just was driving me nuts because they were buying the crap out of it pre-market. I had to turn it off, but this is very important. Talk about it every week, especially these FANG stocks that drive everything. Please don't miss this trade. Okay. All right. So as long as this doesn't get an ATR below this zone, it's still a bullish setup, and I want to go long at least one strategy. That invalidation price be 70. So if this gets down to 70, then my long is off the table. It did not. Long still valid. What is the long? This is the slug. Top run and major lugs. Apex 44. Of course, I didn't put on the gold, and now it's free falling.
Gold stocks sell GC 522
My
contracts.
life story right there. I just said, I'll come back to that. And because this is the pattern all day, every single day. It's just sickening. Here's your ATR, here's your retest, here's your die. I was going to get short that, and I went to draw these zones. And this is what these webinars cost me sometimes because I can't do everything on one screen. So that's a little upsetting. Anyway, this is a slug. These are the powerful slugs. Stop run, if it pops out of there, that is that distinct setup. I don't take anything else into consideration, right? This is looking bearish to me. So first of all, let's make this is the last 2-day composite. Let's merge those two. And you can see the same thing happened here. It accepted back into it and right down the other side, which we're at right now. So, thesis wise, this looks like this thing's going to die. My slug trade, that's my parameters for the slug trade are stop runs at the lug. And if it moves out of here in ATR, then I'm putting a long on. I think this market's going to get killed. Doesn't matter. There are different trades that I can trade based on that. So what I tell my trade room every day, have your playbooks, right? So you follow your playbooks, whether they're long or short. But when your playbooks match up with your thesis for the day, that's when you can trade bigger size, right? So you go for the throat when everything lines up. When everything's not lined up, which is most days, when things are just choppy, then you're taking this may be long, this may be short, long, short. But when you get a setup, like for instance, if I was long here, I could trade, or if I had a long thesis, I would trade the slug double size, right? I did that a couple times yesterday. So that's how you do it, right? You don't, and that doesn't, then you're not confused. You're not like, well, this market looks like it's breaking down, but we're at the bottom of a market. A good example right now, right? Well, this feels like it's going to die because looks like it's going to be a failed breakout of this smaller balance area. So I'm looking at this. I have conflicting things right now as far as bigger picture stuff. So here's your balance. Here's your attempted breakout. It's about to be a failed breakout once it gets to this high volume node, which is where we gapped up. That's bearish, very bearish. But then when you look at the market profile, you're like, well, we are at this profile composite low, so I don't know what to do here, right? This is what traders go through all day, every day, these conflicted thoughts. Then they freeze and they can't put on the trade, and then they put it on and they think they're going to be wrong and they get out too early. That's why they don't have to be these exactly. If you want these, come in my trade room, and I teach them every day, and they're way more detailed. You make your own playbooks and then follow your rules. Right? And then when things line up to what you think is happening, then you trade in bigger size, right? But you see, I will take this long in NASDAQ, even though I think NASDAQ is going to get smoked. If it bounces off the slug, I'm in the slug trade. If I get a barf, this holds up here, name, and it goes ATR retest failure, I'll be long barf too. This does this, I'm going to be short barf. See what I'm saying? It doesn't matter. I mean, those are the parameters of that exact playbook. Remember, if this touches 70, this is no longer a bullish setup, and I will not be getting in the slug long. I'll be looking for a barf short. But I think that's about all there is here. Let's see. Slug would be long. Is there any liquidity below? There could be a lit trade here too. I don't count this as liquidity. These are algos taking your guys' money. That's not the liquidity that I look for. So I'm not really seeing any major liquidity in here. Izzy, there's no inflection zone here. We're blowing through it, actually. I could go along the Izzy, too, if it moves it back out of there, but it's not looking promising. No barf trade right now. Barf if a retest fails, and then Dada. if I get a stop run down here, another with diverging delta, which that's not happening either. So now we just wait, and I figure out which ones I'm going to put on. So right now I could put on aggressively. If this market holds and doesn't get down to 70, this would be a bullish setup. I can put on slug and the Izzy. It's kind of through the Izzy though. Again, I just drew this based on this gap up. If this holds right here, I'd still put on the Izzy. If it gets to 70, that the long ideas are off the table, and I'm looking for a barf short. Let's see if you guys are saying in here. My thoughts on gold? Well, I was going over that, and then I didn't put the damn trade on. We got a new setup here too. Actually, let's just see. I don't want to keep getting distracted by gold, but I think this may be off the blue lug. No, new lugs. So this is a dad-ass setup, right? What's a dad-ass setup? It's a Dumb and Dumber stop run at extreme standard deviation with a delta divergence. You can see this is making a lower low, and the delta is not anywhere near. This is a dad-ass setup right now, potentially. Right.
S&P stocks LES 513 contract.
I really wish I didn't get out of those original shorts. Because I'm kidding when I say that. Like, it doesn't matter what I wish. I mean, my rules stop me out. That's fine. I mean, I made 2 points. It's not as good as 30. How's the ice feeling right now, by the way? They want to buy some more? Buy some more, guys. You know how that works out. Still coming in. This is the same house again. This is threshold, 513. This is basically another double whammy. You know, double whammies are usually, bullish, or not bullish, but they're in the fade trade the other way. Do you see me going long? No, because none of these setups got an ATR above, right? And they just keep coming in. So if you wanted to go short, you could go short. Say you wanted to be short aggressively, you could go short aggressively off of from way up here, right? And as new setups come in, you just keep, you trail your stop to the newest setup. But there was nothing for me to be short aggressively as far as my playbooks. You see what I'm saying? These are all the same color. Let me change this. Just change this to white. Guys, if this is confusing to you or too fast, one, I'm trading live, right? So it's going to be fast. But until you understand what you're looking at, yeah, it's going to be confusing. But trust me, once you understand it, it's not, rocket science. It's very straightforward, and that's the way I like it. It's simplistic and straightforward. And the simpler you make your trading, the better you're going to do. Right, so this is the most current zone here, 95 down to 92.50. Nasdaq still has not gotten an ATR below that zone, so those longs are still in play potentially. We'll go back there in a second. Put this in. They're hammering these markets. There. $95 to $92.50. It's 5 minutes. Prices wrong. First of all, this is the ATR to get out of the zone to figure out if it's bullish or bearish zone, and then these would be the prices that you put on your trades, and there's your stops. Now, just wait on this one. Again, I could have been short from way up there on these new setups, but none of my playbooks dictated that I put on an aggressive short, right? But all of these, when you saw this, like even from the very start, right? Granted, you would have been stopped out. That's why I stopped out. I was short from way up here. I stopped out because it did pop an ATR above here off of this setup, remember? And that sucks for me, but sometimes that happens, right? Say you said, okay, well, I wouldn't have been going short here anyway because this invalidated a short once it got an ATR above, but these other ones you could be getting in aggressively. From my trade plans that I have, I don't know if I've shown this today or about 85 times, one of these said to get short aggressively, so I'm not short aggressively. It's fine. But we are, this is extreme standard deviation. Many times you have these algos, it's like a self-fulfilling thing. These algos try to play the bounce off standard deviation, but when bigger money's coming in, as we've seen, even though they're buying it. Like there's somebody selling this very aggressively too. But how do you know the bigger money's coming in where it could be a hugger where it hugs this? So these algos buy it and try to snap it back to VWAP, and then they get run over because there's bigger money playing, and then they turn around and they have to puke too. So that causes what I call the hugger when it hugs standard deviation all the way down. Well, what is causing that? Another way to look at volume is the relative volume. And you can see here, it's elevated. So that's what started it, right? And now it's still coming in pretty heavy. And that's why it's hugging. So these algos that are buying, when 85% of the time, 90% of the time when the big money's not playing, this thing will do that, as we all know. Today, they're buying it, and the big money keeps running them over, and then they turn around and they have to puke too. Right? So it's like a self-fulfilling type of thing. So you always want to keep an eye on your relative volume. This is the Sierra chart relative volume, 5 minute. This is showing me the exact relative volume for this time of day for the last 30 days. It's not the Thinkorswim relative volume, which I think is pretty useless, which is just showing you relative volume based on the last 60 bars, right? So you're always going to get a spike at the open, right? Because it's basing it on the prior overnight trade. So I don't use that relative volume. I'm not liking the person here because I can't remember how to answer questions. So this is the, let me just put this in because I don't want to miss this trade. This is the data set up in gold. Put the zone in. I just want to make sure this ATR is correct. Did I put that? No, I didn't put this last zone in. So this most recent zone was the stop run here. This was large. This is 400 plus stops. Huge puke. Shockingly in gold. Not worst traders on the planet, as far as I'm concerned. That's that. That price is 1872. Again, it should not be off of that price. 1827.2 is the top of the zone. On the setup. This is the data setup, which we'll go over here quickly. Bottom of the zone is 1825.0. Here is 2.37. The data is I'm aggressive, meaning I'm getting in as soon as it breaks out of the zone. I'm not waiting for a retest. That is 1829.9, and I could put on 7 contracts, micros. I didn't miss this trade. Trade up there, I think. Look at that, right at the 1 ATR. Isn't that amazing how that happened? Never seen that. All right, so if it comes back up there, I'm going long the data setup, and I'll go over that quickly here again. Let me find this market first. Data is number, I don't know which Apex account I'm trading here. Data is number 41. One of these days I'll have those memorized. So that's locked and loaded. So what is the data? Again, it is the Dumb and Dumber aggressive opposite delta trade, data. So that is, what am I doing here? We are extreme standard deviation with the delta divergence. That's data with the volume setup. That's just all it is. Okay. I'll take the long aggressively out of there. All right, let's see what's going on in NASDAQ. Something else fired off in crude too. I'm glad I got out of that long because it's selling off. Again, new information, all bets are off. Wait for a new setup. So remember, 70, as long as the ATR is the same ATR as 25, 70 will invalidate any longs, and then I'm looking for a bar of short on, NASDAQ. They're getting smoked. Again, guys, all this stuff, there's discounts on my website. Tick Strike, Bookmap, for the Global Plus, all of it. Everything that I use except for Ludwig Levels, you got to go to her website, ludwiglevels.com, LUDWIG levels.com. Say you saw it on a Bookmap webinar, and she has special pricing for you guys. Let's see. This is down to 24.8, 25.3.
Crude stocks CL 186 contracts.
Crude's getting small too. So the invalidation price was 71.50 now. Did it get down to 71.50? Well, let me guess it was the exact tick to the ATR, 90% of an ATR. Let's see. Missed it by 2 ticks. That was not an ATR yet. So I could still take a long, potentially, if this gets back outside the zone, but it's real close. All right, it'll probably come back down there anyway. All right, let me, before I draw the crude stuff, let me see if there's any questions here. Okay, so I've shown how I plot the black lines, how I draw the lines. You take the spike on the chart, and then you follow all the prices with your little crosshair guy here, and then you draw the zone. It's not an idea. I'm just, the idea behind it is I'm drawing the setup. It just came in. So right now, I'm just going to clear this all up because all these were before the number. Rather than this liquidity is getting filled, by the way, that's quite the shocker. So this is another stop run. So all I do is I take the spike and I incorporate all the prices in the spike. So it started right here. Started a little bit before. Stop runs will start before sometimes, but these are the, this started this move down. So I'll draw that there. I think that's the bottom. And again, I try to color them certain colors so I know what I'm dealing with. This one white. That's the idea behind the zones. It's not an idea. It's just I'm drawing where this stuff fired off, whether it be icebergs or stop runs. It looks accurate. 75 down to 74.93. Bubbles back up. Base it on. How it moves in and out of here, and then I look at my distinct setups and which ones I want to trade. Is this an inflection zone? No, but surprise, surprise, this thing held this inflection zone. So there's really nothing for Izzy. That's the inflection zones trade. As far as crude, the profile stuff. This was a stop run. This is not extreme standard deviation. This is right at VWAP. This is an important area for crude, though. Right? As far as look how this market reacted to today's trade. Market profiles are incredible too, right? Especially with volume events at the important areas. Came in, tried to get in, no dice, got out. Now it's trying. This is where it launched from. It closed inside here yesterday, prior one. Now it's trying. If it gets back in here, what do you expect? The other side, or it could just bounce and come back. We have a volume event here. I don't have a specific playbook for the market profiles yet. Again, I've got about 50 of them. I'm releasing them, one at a time. Right now, we're just focusing on these, but I've got about 50 behind these. So I don't want to overwhelm my room or myself. Other questions? Breakdown in the zone, convicted iceberg interest, rejecting price back out. Sorry, couldn't answer initially. Was managing. Oh, I was asking why I wanted to be long. All right, so there's really no questions. I guess everybody just has it all figured out, which is good. 75 to 74.93 is this zone. See how this, it's going to be my new motto on my website, I think. It brings order to chaos. If you're just staring at charts, bar charts, or even just the bubbles, you're like, what the hell is going on here? Knowing how to draw these, knowing how it should react, having your prices, knowing your areas, it brings order to chaos. Other than that, you bring a layperson in here that's never looked at markets, this looks like mayhem to them, right? It's chaos. This stuff brings order to chaos. It's literally going to be my motto. I stole it from Spot Gamma. I heard him say it not too long ago, so I think I'm going to steal it from him. It still has not gotten an ATR down here, below here, so let's check ES. Forgot all about this setup. I'm not filled in gold yet on the dad trade, but close. That, and let's see what happened here. We're still inside this volume event. And never got an ATR below here yet. So this stops. This wasn't quite threshold on the buy ice, but the stops were, and then that's what this zone is. I already have that zone in the spreadsheet, so I'm just waiting to see how it reacts there. All right, guys, we're approaching the time for the other the Tom dude that does this thing, Tom's Traders Lab or whatever. What's his name? I forgot his name. I think it's Tom. He starts at 9:30. So, I didn't put on any trades on the webinar. I was short here. I didn't get my parameters to trade. I still can put on BARF off of these setups in here, and there's 2 setups that are still alive, long setups in Q. As long as this doesn't touch an ATR below here, I will still put on those longs if it gets above here. Or else I'm looking just for new setups, right? And I'm paying attention to the areas, these important areas. Right? So the other thing with these zones too, it's really important information. If I didn't put a trade on here, for this market to just rip right through where this market gapped up today, that's giving you information that this is very likely to happen today. Especially, we know all the buy ice that is getting absolutely their head handed to them today. Yeah, you might see literally a 100-point move down from here would be. It's just a guess. That's just my opinion. I don't trade my opinions. I trade my setups. But my thesis right now is these markets are way more likely to get killed than rebound. And then you have a failed breakout of this guy. This is telling me into this zone and beyond. Maybe not all today, but and then down to 0, which I'm always cheering for. All right, guys. Again, I'm watching crude too, how it reacts out of this zone. You saw those prices I put in. Gold, I'll go long gold. So there. Other than that, I'm waiting to see how the markets react to these individual zones, these new zones in NQ and ES. Hopefully you figured out what I'm doing. I do this twice a day in my trade room if you want to come by and learn. A lot more detailed, obviously, and then you learn these setups as well, but you make your own setups and trade them yourself. All right, I will see you guys next Thursday. I'm not liking the solo thing, but it is what it is. I'll see you guys next week. Thanks.